Hello and welcome to the video. I am Eric Gamez. I am the owner of GGS Consulting. In today's video, we're going to go over what is a good P&L. And P&L, again, if you don't know, stands for profit and loss statement. It's basically shows us over a period of time how well our business is doing. So we're going to go through what bad books look like, quote unquote bad books, and what good books look like, because a lot of clients and prospects will ask me, well, what does good books actually look like? What do clear books look like? And so we're just going to go over that in this video. And if you do your own books, or if you prompt Claude to do your books, which totally recommend if you're beginning, or if you're somebody that's not quite ready for QuickBooks or more complex accounting where you need balance sheet or statement of cash flows and things like that, totally recommend that you utilize Claude and all of the AI tools that help get you a better, clearer picture on your business. And so let's go ahead and get started here. This is completely real sample. The data has been swapped out for a imaginary client so that we're not revealing real information. But basically, this is what this person had in their books. And as you can see here, they have their sales categorized, which is great, but they don't have it categorized in different type of categories. So if this landscaping company has different service lines, it's not being reflected here, which makes it hard for the ownership management to make decisions based off of that. And then the other big error they have is that they're categorizing an owner deposit as income. Right, so some of you might know this is a contribution by the business owner into the business, and it's not something that we categorize into income, and it's something that is more of a balance sheet item and will affect the statement of cash flow. So it's not something that would go in here, and we're overinflating income. Same with loan proceeds. So again, this is a balance sheet item, not something that would be affecting the profit and loss statement. So we're overstating our income for the year by $75,000. So as you can imagine, that's a big mistake. And that's not even taking into account the income that we're not recording in our books, right? So it's a little bit harder when we're doing recording and accounting, not using QuickBooks where all of our systems combine. But as you can see here, there's $8,200 of cash jobs that were just never deposited, Zelle and Venmo that was never brought into our books because it's a different system, and then $2,500 of just work that we did and did not invoice for. So basically we're acting as a bank or a charity, right? So $15,000 that we're not categorizing on top of $75,000 that was misrecorded here. And so now we go and we look at the expenses, right? So big one that sticks out to me here is an uncategorized expense. So a lot of people will have an uncategorized expense category where things that we don't know exactly where they go, whether that be from a lack of accounting knowledge or just you don't exactly know what that expense was. A lot of people or places will have a ask my accountant category. And so as you can see, this is a pretty large number here, which makes it hard for the business owner, for management and the investors that come in and look at this profit and loss statement to say what this expense was and to make any decisions based off of it. So that is a huge red flag when looking at the books. Another area to look at here is the owner draw. Again, does not affect the profit and loss statement. That is simply an investment or a draw from the owner. And so it does affect our cash flow, but it does not fall within our profit and loss statement, because obviously if we're depositing money into our account and we are taking money out, it's not something that it's not an actual expense, right? So it does not go in here, and it's just something to keep an eye out for. So another area, again, miscellaneous here, like what is that? That's hard for us to understand and make decisions based off that. So we should be very cautious about how we use this category. And then auto and truck, right? So it's fine to include that in here if it's part of the business, but what we need to do is we need to make sure that if this truck or if this vehicle is being used by the business owner for personal use, we need to actually split out the time that was in use for the business and in use for personal use. And this not only is something good to do for business management purposes to say, hey, this is how much we're actually spending and we can actually calculate how profitable our business is, but it also plays into tax season, right? So if we are not bifurcating that out, it makes it really hard for us to, during the tax season and while we're preparing our tax returns, to say how much of the vehicle was used for a business, because it will either allow us or not allow us to take certain deductions. And so it's very important to have that number dialed in. So once we take all of that and we sum up net income, we see $26,000, which is a completely misleading number. And this doesn't seem like a whole lot when you see that our revenue was at $573,000, and it is not accurate. So it's very hard for us to make decisions based off of that. And the business owner or whoever prepared these books just has no idea how far off the books are. And so that, again, very important to be aware of these things and to be aware of them, so that when we are preparing when we're preparing the books, we're able to make sure to stay away from these errors and make sure that we are doing the right thing, which leads us into the good P&L example, the good profit and loss. And so we'll start again with the revenue side of things. So here you can see that the sales category that we previously had, the 498, is now broken out by the 3 types of services that this business performs. So 320, 145, and 48 from the different type of services that this company provides. And they've included all of the missing transactions. So everything in the red they've included. And so now they have a clear and accurate picture of all their revenue, as well as how much each different category is driving. So if we take equal sign there and we divide that by the total revenue, and if we lock these there, oops, we gotta lock that. If we go like this, we change that to a percent, and we drag that up, you can see that we are getting an extra 10% or almost 10% in materials markup compared to the total revenue. So if I'm the business owner, I say, hey, maybe this is something that we continue to improve because it's something as simple as just marking up the pricing, and it's a very low impact task on our employees, but very high return. I mean, it's almost $50,000 in additional income that this business is generating simply just by tacking on an additional markup to the revenue. And so this is something that we're able to analyze and look at that we previously were not able to do. We had no idea where this sales income was coming from. Okay, so that is one of the reasons that we like to split up revenue that way, is that we can kind of see what's working, what's not working. Obviously, we're seeing that landscaping services makes up the bulk of our revenue, and so that's good, and we continue doing that. And then the other thing here that is useful is the actual cost of goods sold. So not all expenses fall within the operating expenses section. We first need our cost of goods sold so that we can calculate our gross profit. So again, we can see that we're spending $132,000 on materials and plants, subcontracted labor, and equipment fuel. And so we subtract all of that from our revenue to find out our gross profit, which is really helpful for making decisions on how much we're spending on, how profitable the jobs are. And then from there, if we are seeing a loss or a trend down, we can see, well, our materials, our labor, and all of these other resources fuel the expenses that are driving the decrease in profitability? Or is it actually, are we just spending too much money on things like keeping the lights on? And so that is why cost of goods sold is really useful. Sometimes you'll hear cost of services if it's, say, an accounting or a legal firm. And so that is cost of goods sold. And then we look at our operating expenses. So you can see everything here is categorized. We're able to see even vehicle repairs. We're seeing the breakout in a more nuanced way. So instead of just plain auto and truck expense, we're seeing how much is actually spent on vehicle repairs and maintenance, how much is spent on, we could even have a fuel category in there, and obviously this is a landscaping business. If you're running a legal firm or an accounting firm, it's not something that I would expect to see in that business's profit and loss statement. But again, every business is different. We can really do a lot with this, so we can see how much we're spending in advertising, right? So how much it takes us to, if we're spending $6,400, then we're making, let's look at the revenue here, and we divide that by this amount there. We're making 80 times. So for every dollar that we spend on advertising, we're making $80 back. So it allows us to even see if we're doing a profit and loss statement on a monthly or quarterly basis, we're able to see if that number is trending up or if it's trending down. And so that's why keeping track of little things like this is very useful, so that we can track every expense to the different categories, and we can make decisions, and we can reasonably decide whether to keep certain things, right? So the final number that we look at is our true net income. And again, something that we did not see in this expense or in this revenue is the owner draws and owner contributions, which again does not live on the profit and loss statement. So that we see our true net income, and this is the same business, is a lot higher, right? So we have $26,000 over here, 28, that's almost 2.5 to 3 times more net income. Simply just by categorizing this correctly, we were able to unlock a lot more in paper income, right? So nothing really changed the business, but because we're able to track that a lot better, we're able to make better decisions so that this business can actually grow and be more profitable in the long run, right? Because we're making decisions that are not based off gut instinct, or they're not based off the bank statement alone. We're able to kind of look at the true numbers and be able to make decisions. So hopefully this was helpful. Oh, one more note here that I have. So why does it matter, right? There's a couple of reasons. The first reason is taxes. So if your books say that you made $26,000, but you really made $82,000, your tax return is wrong. And it'll trigger red flags, right? When we have certain things miscategorized, it's very easy for the IRS to, in their automated software, they can clearly flag certain things that just don't seem right. So it's very important to have a clear understanding of what our business is spending so that we put them in the right categories. And then 2, as I mentioned previously, making decisions. You can't price a job, you can't hire somebody, and you can't take a loan off numbers that are made up, and certainly not is in the first example where it's a lot less than what we actually have in our second example. So this is something that's more favorable for us to get a loan with, this $81,000. And then 3 is value. So if we ever sell the business, or if we're ever trying to sell the business, they're going to look at the profit and loss statement, even if it's several years before. And if the profit and loss statement isn't being updated in a regular basis, it's going to be very hard for the business owner to go back and clean things up 5 or 10 years down the line, even 2 to 3 years down the line, looking at different things and saying, what did we spend here? What did we spend there? And so keeping this up to date and accurate on a concurrent basis is very helpful for the business. And so again, the profit and loss statement isn't about being fancy. It's not about doing anything crazy. It's very simple. This is one in Excel. This is something that Claude can give you. I'm happy to help you all out with the prompt on how to get a profit and loss statement like this. The QuickBooks profit and loss statements are very similar, and it's all automated that you just pull the reports. Either way works. It doesn't really matter, but it is important to have it at the very least, even if we're not looking at the balance sheet, which is arguably one of the most important financial statements in the business, probably even more than the profit and loss statement, even though the profit and loss statement, or sometimes called the income statement, is what people look at the most. All 3 are important. And so this will give you a bottom line that you can actually trust and make instinct decisions from. And so if your books don't look like this, and you don't even know how to get them to remotely be like this, even if you are using Claude or if you're getting into AI, reach out to me. My email will be in the description. Leave a comment if there is a particular topic or video that you would like more analysis on, would be happy to make a video on that. And then check out our website at goggsconsulting.com, where if you would like this just to be done for you and you don't want to go through the fuss of, do I have accurate books? Do I have good books? Do I have bad books? Do I have things that are miscategorized? Do I have any errors or red flags that would trigger an IRS audit? Reach out to me and I'd be happy to help.